Okay, I'm Mr. Musgrove, and as we've been talking about some of the social changes in the Roaring Twenties, you have a list here of some key ideas, that we've just kind of finished off, and now we're going to, focus on going forward with the economics of the Roaring Twenties and how that is going to contribute to the Great Depression and also the government response within the New Deal. All right, so again, key ideas for us to be able to remember about the social issues of the Roaring Twenties was immigration, the Quota Act of 1921. The Act of 1924 is definitely going to restrict immigrants from coming into the country, a definite reaction towards the turn of the century when many new immigrants came over through Ellis Island from southern and eastern Europe, as well as many Asian Americans now came through Angel Island in San Francisco. We saw that now more and more people were going to school, and Dewey was one of the people who was a key person in regards to that. So if we're going to have like a more modern democratic society, we have to have people who are going to be educated. And you have issues between women and women's roles. The flapper is one of the examples we spoke about, in class, and how she was different, in women's roles than what her mother was. So we also talked about science and religion. The Scopes monkey trial, the Butler Act, as an example, is about whether or not they have taught evolution in school. All right, and so other things we talked about was the Harlem Renaissance, African Americans, going on to modern societies where people began to have leisure. We talked about sports heroes, other types of American heroes, the importance of the radio, advertising, all right, and then the beginning of the Red Scare. All right, so let's go ahead and continue on here, all right, with the next cycle here. So we should be able to see, all right, that in this next cycle, all right, as we're going through, you have the Gilded Age where you have the rich got richer, corporations got bigger, made it more difficult for smaller entrepreneurs to be able to compete, all right, and likewise there was a lot of influence, by these corporate leaders, all right, in government, all right, and then there was a response of the progressive movement where people wanted to have change and have a quick, effective change, have a more responsive government to protect them. And we talked about that with the Jungle and the Meat Inspection Act, among other things. Now, here we are, the Roaring Twenties, right? And so we're going to look at some of the, we just finished with the social issues, but now we're going to look at the economic issues. So we can maybe predict with the Roaring Twenties, maybe the bubble's going to pop, all right, and will lead to the Great Depression. So let's look at some of the causes of this. All right, and I'm going to recommend that basically what you do, all right, is you look at, these, and maybe you pick, maybe one to be able to remember beyond the crash of 1929. All right, so you have number one, overpriced stocks. It kind of reminds me of today with over speculation, with like Peloton being nearly an exercise bike being worth $150 a share, but almost as much as Walt Disney, but more than Apple. I don't think so. All right, we just went through the GameStop issue where GameStop went up to almost $300, a little bit more than that, as a share. And you can't tell me that GameStop, right, as a valued company is going to be worth more than, say, Chevron or even like Lowe's or Home Depot. All right, so overpriced stocks, people trying to get rich quick. And we talked about, shorting of stocks and things in class. So both sides of the Atlantic here in the United States, we pass a tariff, and they're also going to pass a tariff, all right? And that's going to dry up international trade and people buying stuff, right? And so if the Europe can't sell their stuff, then they can't pay their debt. So again, Europe is unable to pay their war loans. Now, if I'm a common farmer down here and I need more money to go ahead and pay my mortgage or to support my farm, and I don't have that money, what am I going to do? I'm going to plant more. And if I plant more, and that's the same thing that everybody else is thinking about doing, if every farmer plants more, well, it's going to only flood the market. You have over here industry overproduction as well. All right, all kinds of companies who produce too much. It's sitting in their lot. It's sitting in storage, and they're not selling it. So they're having a really big problem in terms of being able to pay their bills as well. Over here, we have stagnant wages. All right, people are not making more, but things may be becoming much more expensive. And the last thing over here is that the installment plan or credit card debt is where it all begins. Consumer consumption, being able to buy things that you cannot afford, living beyond your means. The average American today has about $6,000 in credit card debt. All right, so these are all the causes that will lead to, all right, the Great Depression, a significant depression that's really hurt people economically, at home and jobs, families, all kinds of ramifications. So the crash of 1929, all right, is the final one. So beyond the crash of 1929, try to remember, something beyond that you can remember of what caused the Great Depression. So let's look here in terms of, now we have Harding, all right? And Harding says we'll have a return to normalcy. Well, not really. If you remember back from our key ideas from the Roaring Twenties, it really wasn't normal with like the fight over evolution being taught in schools and immigration restrictions and the Red Scare and conflict between mothers and their daughters over this new role of women in society. All right, so it really wasn't. But what they meant by that was it was going to no longer have to worry about World War I. So you have economic policy, the recession of 1920-21, which is basically when you have about 6 months of where money is not being made. All right, and so therefore, how did our government at that point handle it? Did they try to inject money? Did they try to do artificial props or help certain companies out? All right, what they did, all right, was they cut the budget. They stopped government spending. They lowered the rates. All right, they did put some cash into circulation for people to be able to spend. All right, and we need to compare what they did there, with what happens with the Great Depression later on. Obviously, this is going to take about 1.5 years for our country to get out and begin to have positive economic growth. All right, so normalcy, which you have also at this time with Harding. Down here, the Teapot Dome scandal. Now, this is the biggest scandal in U.S. history, up to this point. And basically, Secretary Fall leased government land or oil reserves, all right, to companies with no bid contracts, meaning that they wouldn't have to pay that much money. It'd be cheap for them to be able to do that. No competitive bidding. So they can get it really cheap, but in return, all right, they gave Fall bribes or gave him money. So we can describe what's going on here starting from about 1923 on to about 1929 is capitalism is on overdrive with all the speculation in the stock market, people trying to get rich quick, all right, and that was just not to be the case. Now, understand the Federal Reserve, which is new, that came into existence with President Wilson, their job is to set interest rates. We talked about that in the past. So when things get to be going too good or people trying to speculate too much, what they do, all right, is they raise interest rates to make money more expensive. That will stop people from buying on margin or loans. It makes money more expensive. If you keep money cheap like it is today, it allows for people to buy much more so on margin or live beyond their means or take loans out that they could never repay. And that is going to potentially lead to a bubble. Right now, some economists believe that so long for the last, I don't know, maybe since eight last years, that we've had a lot of cash injected into our economic system with interest rates being low artificially. And the question is that going to start a bubble that we might see in the next few years? All right, so let's look here. All right, let's go on to the next one here and look at what is exactly Black Tuesday, where the country and a lot of people lost as a whole $4 billion overall based on the stock market.
Most people mark the beginning of the Great Depression with a day known as Black Tuesday. What happened on Black Tuesday? Why is that day so important? A corporation is a business which individuals buy stock in. The more stock one owns, the larger share of the corporation that person has. These stocks are bought, sold, and traded on the stock exchange. The American Stock Exchange is located on Wall Street in New York City. The success and failure of these corporations is gauged by the Dow Jones Industrial Average. The Dow Jones is an index which shows how large corporations are performing on the stock exchange. If the Dow Jones average goes up, this means that corporations are prosperous and their shareholders are making money. If the Dow Jones average goes down, this means that many of the corporations are facing economic hardships. Throughout the 1920s, the Dow Jones Industrial Average had steadily gone up, along with the unprecedented economic growth in the United States. In fact, it had continued to rise for 9 years in a row. However, in 1929, the stock market saw major fluctuations. Throughout the year, there were ups and downs as investors bought and sold in sporadic fashion. During the summer months, some economic analysts predicted a major slump, but most did not heed this warning. Thursday, October the 24th, 1929, was the first day that saw a dramatic shift. When the stock exchange on Wall Street opened, there was heavy trading, with many choosing to sell their stocks and get out of the market. This caused an 11% drop in the value of the market. A group of leading bankers even held a meeting to see if they might be able to find a solution to the panic that had ensued on that day. Monday, October 28th, saw even more activity. The Dow Jones Industrial Average spiraled further downward. This meant that many investors desired to sell their stock, but no one wanted to purchase those stocks for the prices that they were being sold at. The next day, October the 29th, 1929, was the day that will forever be remembered as Black Tuesday. That day, the Dow Jones Industrial Average fell 30 points, losing 12% of its value. More than 16 million shares were traded, a record that would stand for more than 40 years. With so many investors looking to dump their stocks, hysteria ensued, and thousands of people lost their personal fortunes. The stock market had lost more than $30 billion in value over the course of 2 days, and the event became known as the stock market crash. The stock market continued to fall even lower over the next 2 weeks before finally stabilizing in mid-November. June of 1930 saw another slump in the market, and yet another downward spiral occurred in April of 1931. Investors had lost faith in the American economy. The decline in stock prices caused bankruptcy and business closures for many corporations. Expansion and innovation became more difficult as no one wanted to invest their financial capital and take risks. As a result, it would take more than a decade for the U.S. economy to recover. This is why Black Tuesday is considered the event that started the Great Depression.
All right, so does that sound a little bit like what's going on today? Volatile fluctuations of buying and selling in the market, where you have people who are driving up prices of stocks and they're being all of a sudden sold, and all of a sudden they're going down to a lesser amount of money. All right, and so it does sound a lot similar. So to make matters worse, all right, you have the Smoot-Hawley tariff, and basically how much did equities drop? Equities means like shares or stocks, in corporations or companies. And so you see right here that basically what's going to happen is it's going to make matters worse by putting a tax on foreign goods, in which they will also put a tax on our goods. And so we're not able to sell our things to them. They're not able to sell their products to Americans. It's going to be a complete mess. It's almost like shooting yourself in the foot. All right, and so to make matters worse, this tariff has gone down in history as making it. So if we look over here, they lose their seats in the midterm right about here, the two people who came up with the idea of a tariff. And remember, a tariff is a tax on imported goods designed to protect domestic or home manufacturing. So as you can see right here, right, this is also a big contributor. All right, so we'll pick up next time with what life was somewhat like during the early onset of the Great Depression. Thanks.